Hi, my name is Khan. Welcome to the new episode. In this episode, we are going to talk about entry types, how we can take entry and which criteria you should follow before enter in any trade. If market is a bullish, then what criteria you should follow, and if market is a bearish, then how we can take entry. We are a day trader, so as a day trader, I will show you exactly how we can trade and which time frame is correct to take entry and which time frame you must be follow. And I will show you exactly one more interesting thing, that how we can take entry without mitigation, higher time frame, order block, zone. Okay, so I will show you exactly how we can apply three types of entry. These three types of entry are, we can cover more than 80% entry zone, correct, and maximum number of the entry we can cover. Only follow these rule. These are very powerful and very unique. Let me show you exactly how it actually works. For example, market momentum is a bearish. Okay, after taking out this low, which is a called external liquidity, and in other structure form, this one is a called break of structure. What happened after taking out this low? Market move something like this, correct, and then what we are expecting here? We are expecting here market break this structure, and then market create order block and inducement and engineering liquidity. Okay, so in this case, this is our first inducement, and above this inducement, this is our first order block where we can take decision for the sell, correct. And another type of the liquidity is available here, that's called engineering liquidity, which is available on the extreme point, correct. Above this extreme, market form here. Okay, and how and where we can sell? What happened after break this structure? Market trying to push higher, something like this, and then what happened after taking out this high? This low has been confirmed. Okay, it means momentum is a bearish after taking out this high, and we are still waiting to mitigate this zone, and then market tap on it, and then we are looking here for sell. Then what criteria you should follow to sell here? Let me show you exactly. You have to apply entry types 1. Why? Because when market tap on the order block, higher time frame supply, then you have to wait for the chalk boss. Okay, and then market break this structure and create first inducement, minor inducement, and then after taking out this inducement, you can sell. This entry is high probability entry, and you can sell on this level directly, but this is not high probability, because directly sell here, then you can see above this high there is another zone where we can looking for the sell. So very highly chances that we can get hit the stop loss. Okay, so in this case you have to wait for the confirmation entry, something like this, correct. Market break this high, taken out this high, and then we can sell on this point. Okay, and how we can get this point, I will show you on a live chart. First let me explain this thing on a drawing. Okay, then I will switch on live chart, show you exactly through bar play, candle by candle, then you can understand more clearly. When market taken out this high, this is an inducement, and market trying to push higher. Okay, and I'm talking about in a lower time frame here. Okay, one market break this low, most recent low, then don't sell here. Okay, some people do wrong thing here, and they looking here for sell, because this is an inducement, which is absolutely fine, and this is a valid entry. Okay, but don't try to sell here. Why? Because if you try to sell here, then 50% chances that market push more higher to test extreme zone, correct. So don't try to sell here. You have to pay attention here to develop price action to sell, and you have to wait for the clear confirmation entry. Okay, so how we can sell here? After broken this low, which is here, and that's called break of structure, change of character and break of structure, as you know. Okay, so after break this structure, what happen? Where we can sell? We can sell, another structure has been taken out, and then market taken out this high, and then we are expecting sell here. Okay, and then we can stack multiple entry here for sell, because market taken out this minor inducement also, and now this setup become our high probability setup. Correct, you don't need to sell directly here. If you directly sell here, then very 50% chance, I will say 50%, because after taking out the inducement, market have a 50%, you have a 50% chance that market may be pushed downside, because above this inducement liquidity is also available, right? So maybe market push higher to mitigate engineering liquidity, so you have to pay attention here to develop price actual like this. So this will be apply type 1 entry, correct, which is here when market tap on the higher time frame supply, then you have to follow this structure, then you can sell. Okay, so don't worry, I will actually show you through bar play, then you can understand more clearly these concept. Okay, but generally I'm showing you that how actually it work. Okay, so same thing apply here when market tap on this zone, which is here. Okay, when market tap here, and same thing, same concept apply here. So you have to pay attention on this level when market mitigate or any unmitigated zone, supply zone or demand zone, then you have to follow this criteria before the buy or sell. Okay, so this is a first entry type, and when market mitigate, then you have to follow this criteria. If in case there is no engineering liquidity available, sometime what happens, sometime market did not create engineering liquidity, and our inducement and engineering liquidity both are on same point. Sometime engineering liquidity already mitigated, so there is a no unmitigated supply zone on our bid. So what happened here, we can now directly sell here. Okay, because we have a no option, because we have a no optional zone, no optional entry, sorry, no optional liquidity, correct. So we can sell here, we can take a risk here for the sell directly, and another entry after taking out this high, and then stack multiple entries as per the plan, correct. So this is our first entry 1. So this is a entry type 1. Let me show you entry type 2 and type 3, which is a really powerful and very different from others. And this type of strategy, this type of entry strategy can change your trading style. In entry types 2, as you can see here, as I mentioned, market trap the buyers and sellers, then you have to follow the same criteria as I mentioned here. Let me show you exactly how it actually works. As you can see here, market break the structure and taken out the first inducement, and in this case market close above it, right? Market must be close above it. If market close above it and did not mitigate our supply zone, correct, then how we can sell here? You have to wait for the break of structure, and then first inducement, lower time frame confirmation, and then we can stack here as I mentioned. Okay, but in this case market did not mitigate our supply zone, correct. Market break the structure, taking out minor inducement, and then looking for sell, and we can continue stack the position. So this is our first scenario when we can sell, and this is a called entry type 2 as I mentioned here. Let me show you exactly here. Market trap and close above it, then break of structure, taken out first minor inducement, and then we can continue sell. So this thing apply when market break the structure and close above it like this, means inducement, taken out the inducement and taken out the high, market taken out this high, that's called engineering liquidity. If market close above it, okay, then you can also apply same thing here. Okay, because this is our entry type 2, there is no need to mitigate any supply or demand zone. Okay, but you have to remember these criteria must be followed, and I will show you how market actually move like this. I will show you exactly. Every time you will get new setup every time, and you can catch every move. You don't need to wait for the mitigation, supply or demand, and then wait for the chalk boss and then buy or sell. No, that type of entry are very low probability, and these type of entry are very high probability, and you can catch every move. Same thing apply here. After taking out this high, which is here, which is engineering liquidity is here, if market wanna go downside and supply zone is here, okay, then what criteria you should follow? Same thing will be apply here, same thing will be act here, like this, correct? Because you know market taken out the engineering liquidity. Our main purpose is taking out the engineering liquidity, not mitigate the zone, correct? If market mitigate the zone, which is a very good, then you have to apply entry type 1, okay, like this, okay, entry market taken out the minor inducement and we can sell here, okay? And in this case, market taken out this, break the structure, taken out high, and you have to sell here, okay, not here, okay, because we are not tap on the supply zone, correct? So these are minor different but very important. You have to remember these different in your mind, because how we apply. Remember one thing, when market mitigate this zone, then you have to apply entry type 1, because in this case market mitigate, break the structure, taken out inducement, and we can sell directly here. This is when market mitigate the supply or demand zone, correct? And in entry type 2, market trap the buyers, right, buyers and sellers, and then break the structure, taken out high, and we can sell here, not here, because there is no mitigation. That's why we are not willing to sell here. We are interested to sell here, and this is a high probability, correct? So this is a entry type 2, and let me show you how entry type 3 actually work, okay? Then after finish this, then I will move on the real chart, then I will explain you everything single candle by candle in a details, okay? So now let's switch into the entry type 3. This is a entry type 3, and in this entry type 3 you have to remember only one thing, market must be taken out previous swing high. If you are looking for sell, you are in a bearish market, then market must be taken out previous swing high, and when market taken out this high, then market this candle must be closed below it. When market close below it, this is an indication for the reversal. In this case also market no need to mitigate this supply zone, correct? And same thing apply here on this engineering liquidity. If everything is going well here, correct? And then same thing apply here, market sweep this high and then push downside like this, and also no need to mitigate this extreme, okay? Market taken out this high and close below it. This is the first indication for the sell. So where we can sell and how we can get the entry and how we can catch this move. Sometime what happen, price taken out this inducement, and most of the traders looking here for sell to mitigate this zone, but price did not came back here and market pushed downside and continue in a downside, and we miss this move. So how we can catch? This is a very simple, okay? Taken out this high, close below it. So first entry, candles wick here, okay? On the candles wick, which actually took out the previous swing high, this is a liquidity sweep, okay? In this case, market taken out the liquidity. This is an inducement. This is an inducement. You can say also sweep, liquidity sweep, previous high sweep, and then close below it. You can first entry sell here, correct? And where is our next entry? You have to wait for the boss, which is here. Once market break this structure, okay, so this is our boss. You can say chalk also. There is no difference. After break of the structure, when we can sell. You have to wait for the first high taken out. When market taken out first high, we can sell another upper entry here. Correct. This is our another entry for the sell, and we can sell another entry on the candlestick confirmation is here, single candle mitigation entry. Based on the single candle mitigation, I will talk to you later in a detail. Okay, so this entry also be probably for the sell, and we can stack multiple entry in a downside. Okay, so when market taken out this high and close below it, then you have to apply entry type 3. Okay, if market close above it, correct, if market close above it, this swing high, then you have to apply entry type 2. Okay, if market mitigate any zone, then you have to apply entry type 1. In this type, you can catch every move. Okay, most of the time, more than 80% entry you can catch if you know how to apply it. Correct. It's take some time. I know it's take us some time, some back test, some hard work to understand that how actually work. But once you understand that how actually things are working, then you can smash it. Seriously, this is a really game changer. Okay, let me show you through bar play on a real chart that how we can apply and how we can take trade. Okay, let's see. So this is a bearish market. As you can see here, market creating lower lows, and sometime market mitigate the order block, sometime not mitigate, and sometime also not reaching the order block, and before this order block market also pushing downside. So there are different scenario, and every time market don't mitigate any order block. Every time you have to wait for the confirmation as per our criteria, then you can sell. If you know that where you should sell and how we can sell, okay, then you can actually catch every move. If you are still waiting to mitigate something, like in this case this is a order block and you have to wait for the mitigation, then you can't. Okay, then you can miss this move, actual move you can miss. Same thing happen here, market break this structure, this is inducement, close above it, and most of the retailers looking here for buy because they are expecting this is a chalk reversal and they are looking for buy, but this is a trap. That's called entry type 2. Okay, so at this point you can see here market sweep this high and taken out liquidity, and this is IFC, and which is high probability and minor imbalance here. What market did not mitigate this, but market just simply sweep this high, which is here, minor sweep high and then push downside. So how we can take advantage of this type of the entry? Correct. And on the extreme point, you can see here break the structure, mitigate this order block and push downside. Maybe this time you can catch this move, probably, because after tap this you can catch in a lower time frame to see if everything look fit in our criteria. Okay, but I will show you exactly that how we can catch every move, like this and this. Okay, and this also, and this one is also. Okay, so let's see, start with entry type 1. So in this case, market break the structure. Our first inducement is here. You know, after taking out this high, this low is a confirm. Okay, and after taking out this high, where is our engineering liquidity? On extreme, where is here? And this is called our engineering liquidity, right? So this will be our engineering liquidity, and this is our inducement. Correct. So once market mitigate this engineering liquidity on here, and if market did not tap on the engineering liquidity and market taken out inducement and mitigate something here probably, and then showing some reaction, then same thing, same rule will be applied. Okay, so let's see how market is reacting here when market mitigate any supply zone. Correct. So let's switch into the lower time frame. So in this case, as you can see here, market taken out previous high, which is here, and our most recent low is here. Okay, once market break this structure, most of the traders looking here for the sell, and this is a break of structure. You can say also change of character. Okay, after taking out this low, break this structure, I'm expecting for the sell, but where we can sell, where is high probability zone. So let me show you exactly. This is our first inducement after break this structure, because this is our counter trend. Okay, in this move, for this move. Okay, so this high is responsible for this move, so you have to wait for the inducement this high, and then we can looking for sell. Okay, and if market did not push higher, then market create another low like this, and then this high is called our inducement. Okay, if market again create a new low, and this will be our first inducement. Okay, so price must be taken out first inducement, as I mentioned in entry type 1. Okay, so let's see what happened next. All right, as you can see here, market did not taken out this high and create new high, which is here, and this is our first inducement, which is must be taken out before the sell. If market taken out this high, then we are interested for the sell. And some people do wrong thing here. They expecting market break the structure, they probably looking here for sell, because this is a order block, correct? And some people do again wrong thing. They expect this is a break of structure, and they probably looking here for buy. Okay, and they expecting push higher, and these both type trader is SMC trader, SMC, and that's called SMT, smart money trap. Okay, so most of the traders, some traders looking here for sell, and some trader looking here for buy, because they expecting break the structure and push higher, and then pushing downside and then go higher. And another type of trader introduced here, they expect a demand, and then they are looking for buy after taking out this high, or probably here. Okay, because they call this is a change of character. When market break the structure like this, okay, and they would like to buy here again to push higher. So both type traders introduce here for buy or sell. This is a called smart money trap actually, but we know that how we can trade here. This is our first inducement, correct? You have to wait for the taken out this inducement before the sell. So let's see what will be happen here. Market showing some reaction. Okay, let's see. And market push higher. Okay, after broke this structure, and this is our inducement, because we know that how mark the structure exactly. Okay, and some people mark this is a chalk, because they anticipating price go higher, because some people buy here. Okay, and some new retail traders, even SMC trader, introduce here for buy, because this is a order block. They mark this is a order block, and some people mark this is a order block, and they anticipating price go higher like this. Okay, but in reality these thing doesn't work, because market need liquidity before go higher or lower. In this case, this is our first inducement, liquidity. When market taken out this all stop loss, who sell here, they put the stop loss probably here and just above it, sometime here and sometime here, correct? So when market taken out the liquidity, then market push higher or lower. As I mentioned in previous video, banks and institutional, they don't care about your structure, your order block. They care about only liquidity. Okay, so this is our liquidity point. Once this is a sweep, we can sell here. Okay, let's see what happened. Market break this low, okay, and close below it. So this is a single candle order block, correct? In this case, you don't need to wait for chalk or boss, anything. Liquidity has been swept, taken out and close below it. So this is an indication for the sell. We can take entry for the sell. Okay, so this here. Okay, so if price push upside to mitigate this order block, then we can sell here, and our stop loss is here. If market hit our stop loss, this will be fair. Okay, why? Because we follow our rules. Okay, so let's see what happened here next. market mitigate, and one more thing you have to understand here, market again break this structure which is here, and some SMC trader buying again here, and they put the stop loss just below it and they hit the stop loss, correct, and smart money traders trap here before buy or sell, correct. So market break again this structure. Why market break this structure? Why this is structure? Because market taken out this first inducement, okay. So after taking out this inducement, this low is a confirm here, correct, and this high is a confirm here. So this is our structure, new structure, and in this case market did not close below it. So you have to remember, and as I mentioned in a first video, in a higher time frame, in a break of structure, okay, price must be close below or above. But when you are going into lower time frame and looking for entries, then you don't need to wait for the candle closure, okay, for the confirmation. In this case you can mark this is as a boss, but you have to remember this will be applied in only lower time frame confirmation, okay. So this is our break of structure, so where we can sell, okay. So most of the time we are anticipating sell here, because this is our order block, correct, and above this order block there is nothing above this order block. So what we can do in this situation, we can sell here, okay, and put the stop loss just above it, because this high has been taken out the liquidity, correct. So this entry is here and stop loss just above it. This is a safer side, okay. There is very low probability market taken out this high. If market taken out this high, then market momentum change, okay. So you don't need to put stop loss here, because in this case if market push higher, little bit push higher, then what happen here, market maybe sweep this order block and then push downside probably, then you have to put your stop loss just above it, correct, and then you can scale another entry if market sweep this order block, correct. So let's see what happened here next. Our target will be M15 swing low, correct. So let's see. Okay, as you can see, break the structure and pushing downside, and now we can see here market create another order block which is here, but we can't sell here. Why? Because there is no inducement, because market break the structure something like this, okay, and moving like this, okay. So this is our first inducement, okay. Don't be inducement and don't become a liquidity, okay. Wait for the inducement, then we can sell here. So first inducement is here, which is here, so must be taken out before the buy or sell, okay. So this high has been taken out and this low is now confirmed, as I teach you in a market structure video in a part 1, okay. So this low is confirmed, and let's see if market give any opportunity here for sell, because market already taken out the inducement, correct, and you have to wait for the confirmation to add more entry, okay. So let's see what happened next. Okay, as you can see here, market taken out this previous candle's high which is here, okay, and I will show you how liquidity sweep actually work. This is a entry type 3, okay. So you can sell on the next entry point which is here, and put the sell limit order is here and stop loss just above it, and target will be same here which I mentioned in M15 recent low, okay. So now we can see market again break this structure which is here, correct. So this high or low has been protected which is here, okay. So this structure is now confirmed, and you have to wait for the mitigation this order block before the sell, okay. So let's see what happened next. Alright, you can see market smashed our target, and I think this entry is also mitigate here, which is here. It's take a long time because no volume, because market open, so it's take a time. Okay, you can see here market, how market actually, you can see here market how smoothly working here. So you have to follow your rules which I teaching you, and you can trade like this, because once you understand that how market actually move and where is liquidity, where is inducement, and then how we can take action, then probably you are killing them. So this is a entry type 1, that how entry type actually work and how you can apply in your trading style. Okay, so this is a entry type 1, and I will show you entry type 2 and entry type 3 how it actually work, how you can trade without mitigation. Okay, now let's switch into the entry type 2. Market break this structure is here and create a new low, which is here. When market taken out this first inducement, okay, and what we are expecting after taking out this inducement, we are anticipating price must be mitigate something here, which is here. Okay, this is order block and this is order block, and probably we mark every order block. Okay, and in this case we can see another order block, which is here. We can mark this one, correct. So these order block which we mark, actually if market showing some reaction in a lower time frame like chalk boss, then we can take entry. No, you don't need to wait for it. And these are all retailers entry, and these are SMC trap. Why? Market must be taken out inducement or engineering liquidity. As I told you in starting, that market will be reversal from inducement or engineering liquidity. Between this engineering liquidity and inducement, all levels are act like a smart money trap. Okay, how? Let me show you. When market mitigate here, and in this case market taken out inducement, probably we can looking for sell, but above this order block which is here, market take a reaction and showing some reaction for the downside, and then market again go higher, again market tap here and showing some reaction, then again smart money trap and go higher, and then finally market tap on it, and then we can sell, correct. So between this engineering liquidity and inducement, all order blocks act like a smart money trap. Okay, let's see how trap actually work. Okay, so you don't need to wait for it. Okay, if market mitigate, then which is also good, then you have to apply entry type 1. If market did not tap here, then you have to apply entry type 2. Okay, because this is a here price must be close above it, market taken out but close above it. When market close above it, then we can sell. Okay, so some people ask me that how we identify price will be reversal here and will be not tap here. You have to switch into lower time frame to see how price actually developing. If everything fit in your criteria, then you can sell. If not, then you have to wait for the mitigation, the order block, correct. This is a simple thing. Let me show you exactly how price actually working here through bar play, then you can understand more clearly. Okay, this is here. Okay, and some smart money traders and other traders anticipating price looking for the bias, they mark any demand zone in a left side, refine over refine, and they mark this is a demand zone, and they are expecting this is a demand zone, and they expecting price go higher, and this is our chalk, and again buy on this order block anticipating to catch this move. But in reality these thing doesn't care, previous order block anything doesn't care, live price is everything. Okay, don't be over refined in a left side order block 4 hour weekly and daily order block, refine into 1 minute 15 minute, and I have seen a lot of people refining, over refining, and mark every point, on every point they mark the order block, bearish order block, bullish order block. They trade like a support resistance, like retailers. Okay, think about live price, because live price is everything. Okay, mainly focus on a live price, but you can check higher time frame picture for the longer term perspective. Okay, but if you are a day trader, then I don't think you have to check a daily, weekly chart. Okay, they don't care about your daily and weekly, because 15-minute candlestick or 5-minute 1-minute candlestick cannot decide the daily chart and weekly chart. Okay, now you can see here market taken out this inducement, close above it. Okay, now switch into the lower time frame. When market close above it, then you have to go in lower time frame. Why I am saying here? Because market momentum is a bearish, price must be taken out the inducement, which is already taken out and close above it. So you have to apply in a lower time frame to see how price actually working here, and then how we can sell here. So as you can see here, market taken out the trap here, and this is our trap. I will say trap. Okay, this is our trap when most of the traders looking for buy, because market close above it. But I'm looking here for the sell. When we can sell, apply here entry type 2. Market break the structure. After break this structure, market must be taken out first inducement. After break this structure, where is our first inducement? Was here, correct? But market did not trap this, but market did not taken out this high and break this low and close below it and create new inducement, which is here. So after this inducement, where we can sell, as I mentioned in entry type 2, market must be taken out first inducement. Okay, and then showing some reaction in a right side, candlestick confirmation, single candle order block or liquidity sweep, like candle sweep and close below it, then you can sell. Okay, so in this case, market taken out this high, which is correct, but there is no candle reaction still. Okay, so what we can in this situation, we can, if market did not close below it, okay, and did not give any reaction, then wait for the more confirmation. If price close above it, correct, and this is our measure high. If price close above it, then leave it. Okay, this trap is not work, because market wanna go higher to mitigate. Okay, if market actually gonna downside, then they will give you sign for the reversal. Okay, as we can see here, market taken out previous high but closed below it. Okay, so this is our first indication for the sell, and when market close above it, taken out this high and close below it, then you can instantly sell on the next candle open, which is here. Okay, in this case you can sell here. Okay, why I'm saying? Because market taken out this liquidity, and this is our also called retailers liquidity, like flag pattern, correct? So this is a liquidity and this is inducement taken out, and main thing is here market taken out the measure high and close below it. If price close above it, then we can see some continuation upside, and to mitigate M15 supply zone, correct? So this is our first entry, and market sweep this high, and let's see what happened next. One more important thing you have to understand here, market taken out this high. After taken out this high, market move something like this in a corrective way. Okay, so when market taken out this minor structure is here, okay, before taking out this low, correct, then we can sell here, because market take out this liquidity here. Okay, when market taken out this lower time frame liquidity, we can sell on the next candlestick confirmation here. So this is our valid entry. Same thing apply here. In case market break this structure, I mean sweep this high and close below it, then we can sell. Okay, so let's see what happened next here. Market did not sweep the liquidity, okay, and market pushing downside. Let's see. And one more thing you have to understand here, we can see here market taken out the first inducement, which is here, of course here. Let me show you here. Okay, as I mentioned recently that market taken out the first high, which is here. Okay, and then market showing some reaction for the sell, then we can sell. We can't sell here directly. Okay, but in this case market actually work, but this is a little bit risky. Maybe market push more upside because major high is here. Okay, I hope you understand what I'm trying to say here. Major high is here, so this order block may be a trap. Okay, because if market wanna grab more liquidity, then what happen here? We can see some more liquidity grab and then looking for sell. Okay, but when market mitigate this order block and give any reaction for the sell, then we can here. Okay, so let's see what happen next and wait for the candlestick confirmation. In this case you don't need to wait for the chop because we are already in a lower time frame. Okay, so as you can see market break this low, candlestick low, and create new single candle order block, which is here. Correct. So now we can sell here and put the stop loss just above it, above this order block. Correct. And target will be our M15 swing low, which is here. Okay, so this order block will be our next entry criteria. If market break this low, okay, after breaking this low you can't sell here because market create another structure here. Okay, if market taken out this low, you have to move your stop loss on break even point. Correct. So let's see what happened next. In this case you can see market taken out this low and our stop loss on a break even point, both entry on our break even point. And after taking out this high, where is our inducement? Here. This high must be taken out before the sell. Okay, because now structure is moving something like this. Okay, this is minor structure responsible for this move, but this major structure responsible for this big move. Correct. So this high is our inducement. Price must be taken out this high before the sell. So in this case we can sell here also. First entry, sell here, and the next entry will be after candlestick confirmation. Okay, which will be next entry. Why I'm selling here? Because above this there is not unmitigated any order block. Okay, price already mitigate this inducement, and this is our engineering liquidity, you can say, because above this there is nothing unmitigated here. Okay, so let's see what happened next. All right, as you can see here, market did not tap here, and this is a candle sweep. Market sweep the candlestick and push downside, and this is an anti type 3. That's why I did not mention here, and I will show you that how you can actually catch this move. Okay, you don't need to mitigate this order block. Okay, because market sweep the high and close below it, then you can sell on the candlestick confirmation, and this is a next about anti type 3. Okay, so you can see here how market actually working here. First trap the buyers and then wait for the inducement lower time frame, and then you can sell on the candlestick confirmation. If anything showing any bearish reaction here on this zone, okay, then you can sell here also. If not, then you have to wait for more confirmation. In this case market taken out previous high and close below it, then you can sell, and this is actually anti type 3 and this is anti type 2, middle one, and this one is also anti type 2 but it's not mitigated, but you can sell anti type 3 based on anti type 3 here. Okay, here these are things that how you can trade here. Okay, now let's talk about anti type 3, how it actually work without mitigation any demand or supply, just sweep the liquidity and how we can take advantage. Okay, so as you can see here in a left side, market break the structure which is here. After break the structure, where is our most recent low? Some people mark this is our low and this is our order block. Actually these are not low or order block. Why? Because market did not sweep this high, because this is our first inducement. Price must be taken out the inducement before the confirmation that this is a confirmed lower lows or lower high. So in this case, market break the structure and pushing downside something like this, correct? And then what happened? Price ranging between this high or low, correct? Then what happened here? Market break this structure, and some people say this is a break of structure. No, this is not break of structure, this is our single leg. Why? Because market did not sweep this high, did not taken out this high. This is our inducement. Now market taken out this low which is here, so our inducement shift here to here, correct? So this become our new inducement. Okay, so price must be taken out the inducement before the sell. Without inducement, price can't go higher or lower, correct? So same thing apply here. As you can see here, after these big drop, market must be taken out this high, as you can see here. Then market push downside. Okay, so this low is a confirm. Okay, so these things all about structure. Okay, now let's see where we can sell. Okay, after taking out this high, you have to see in a left side where is our order block. So as you can see here, there is no order block. This was order block which is already mitigated. This one is mitigated by this move. Okay, so only one order block is left which is on the extreme, and this one is our engineering liquidity, correct? But what happened here? You can see market did not taken out this engineering liquidity and not also mitigate this supply zone, but market push downside. And how we can take advantage of this move? Okay, so you have to remember one thing, price must be taken out first inducement. In this case, market taken out this inducement but close above it. So in this case, you can't apply here type 3 entry. Okay, you can apply here type 2 entry because this is our trap. You can say this is our trap, correct? After trap, you have to apply anti type 2. Close above it, then you can see you will get sure in a lower time frame any entry here. Okay, if not, then you have to wait for the mitigation. If price not mitigate, then you can wait for the liquidity sweep. As you can see here, market sweep the liquidity. I will show you. You can see here, market exactly sweep this high, correct? And after sweep this high, close below it. Okay, but remember one thing in your mind, market sweep the major structure, major time frame high. Okay, if you are looking here in a 1 minute, you have seen that 1 minute sweep the high and you are looking for sell. No, you have to wait for the higher time frame liquidity sweep. Okay, so in this case, market sweep this high and close above it, must be close below it. When market close below it, then you can sell. Where you can sell? As I told you in a starting, this candle wick. Okay, so in this zone you can sell here, and this time you don't need to mitigate this supply zone, and you don't need to wait for this engineering liquidity taken out, correct? So in this case, market already taken out the sweep, taken out the high, because banks don't know where is your order block, where is your structure, where is your indicator, where is your anything. we don't care about thing, they care only liquidity. If they know if all liquidity available here, they took out the liquidity and pushing downside. And how we can take advantage? Price must be taken out this high and close below it. So mark this zone, this is our zone where we can take advantage for the sell. Now let's switch into the lower time frame at the same point in a 5 minute, 1 minute to see how actually price reacting here. Okay, so first see in a 5 minute, you can see in a 5 minute also market trap and close below it. Okay, so this one is our liquidity sweep. Now switch into the 1 minute to see how market give us opportunity for the sell. Okay, now you can see this zone is our where we can looking for sell, because this is candlestick which is close below it, and this is our zone for the sell. So in this case, where is our single candle confirmation for the sell? This entire wick which actually took out the liquidity. So we can place our first entry here, and target will be M15 major low. Correct. So this will be our target. I will show you. Yeah, correct. So this one is our first entry. As I mentioned in a entry type 3, that first entry will be which candle took out the liquidity, and those candlestick big act like a supply. Okay, then you can sell immediately. Okay, so first entry will be here, and next entry will be like this. First activate this, and then market push downside, and taken out must be taken out this high. Okay, and when market taken out this high, this is act like a inducement. Okay, because major low is here, has been broken in a downside. Okay, then you can sell here to here. Okay, and stack multiple entries, and this will be our break of structure. Okay, and this is our minor structure. In this case, this is become our first inducement. Correct. I hope you understand what I'm trying to say. Okay, because this is a very important. Okay, now let's see what happened next. You can see first entry our activated, and wait for the another entry. Let's see what happened here. As you can see, market break this structure. After break this structure, where is our first inducement? You know, this high become our first inducement, and this high our become our engineering liquidity. I'm talking about this move. Correct. I'm not talking about this one. Okay, because this is our minor structure like this. Okay, so this high must be taken out, and this is our inducement, and this is engineering liquidity. On the inducement point, probability is 50-50%, and on engineering point is a increase. Okay, because this is our high probability zone. So in this zone, this is our order block where we can take decision for the sell. Correct. And on the inducement in a left side, this order block is available to take a decision for the sell. Okay, so both zone are valid for the sell. So in this case, where and how we can sell? Okay, in this type of the situation, you have to wait for the candle confirmation entry. Okay, let me show you exactly. If you trying to sell here, you say that this is inducement, and sell here and put the stop loss just above it, then what happened? You are taking risk 50-50% chance. There is a 50% chance maybe market mitigate here. Okay, and then push downside probably. Okay, but market maybe market gives some reaction and then push higher to mitigate this and push downside, because both scenario are possible. So you have to wait for the confirmation. You can sell when market tap here. Okay, and give any reaction here. If market candle sweep this high, then very good, you can sell immediately here. If not, then you can sell like this. Okay, how? Like this exactly. This become our another break of structure, and this become our new inducement, and you can sell here. Okay, so these things actually work if market create like this structure. Okay, you can see here market sweep the high, just sweep the high, did not close above it. So this is our good indication for the reversal. Okay, but we can't sell here directly, immediately we can't sell here, because we need some confirmation lower time frame candlestick, sweep the candlestick, then we can sell. Okay, because above this there is a unmitigated order block, unmitigated extreme order block. Okay, so wait for the more confirmation. Okay, as you can see here, market break this minor structure is here. I'm talking about this one. Okay, market break the structure. After break this structure, whereas our most recent high is here. Okay, price must be taken out this high before the sell. Correct. So let's see what happen next if market create another structure like this. So this high become our inducement, and then market push higher, and then I'm interested here for sell at this point. Correct. So let's see. Okay, as you can see here, this is our most recent high which is taken out by this move. Okay, now let's see and wait for the confirmation to take entry, and first entry we can take after sweep this high and close below it. So we can sell, first entry is here, and put the stop loss just above it. Correct. And I think it's look very horrible, but it's very logical. Okay, when you understand that how you should play, then you can win the game. Okay, you don't need to worry here, because you are playing as per your rules, as per your strategy. Correct. So as per our plan, as per our strategy, this is a valid entry. As I told you, when market sweep the liquidity and those candles big act like a supply, which is here. I'm talking about this one. Correct. This one. Let me dark this one. Okay, same thing happen here. This candlestick taken out the liquidity, that's why I sell here. Okay, now it's working, and same thing happening here, taken out the liquidity, and same thing happen here, and it's working. Let's see, and when we can move our stop loss on a break even and take partial and take profit. Measure take profit is measure higher time frame, which is M15 measure low. Correct. And when we can move our stop loss on a break even, this is our order block. Okay, okay, once market broke this low, at least broke this low, then we can move our stop loss on break even point. Correct, because this is our minor swing low, and after taking out this low we can take some partial. Okay, let's see, in case market maybe push higher to mitigate something here, then at least we can make good profit. If not making profit, at least we can cut on break even point. Okay, so let's see what happened next. You can see market break this structure. Okay, after break this structure, where is our next entry is here on this order block, and this order block will be our next zone for the sell, because this is our break of structure. In a lower time frame, you don't need to wait for candle closure to confirmation like this is a pause or chop. Okay, so this is our another break of structure, and this zone become our new entry criteria for the sell. Let's see what happened next. So first entry we can switch on our break even point, because market take out the recent low. Correct. And next entry will be activate if price go higher, and this high, sorry, this order block will be act like an inducement. Order block doesn't mean buy or sell. Okay, order block work also like inducement. In this case, this is our order block and this is inducement. Okay, so you have to sweep this order block and then we can sell, and this is also known as a smart money trap in this case. Okay, so let's see. You can see our second entry also mitigated. If market taken out this low, then I would like to trail my stop loss and break even point here on both entry. Correct. If market maybe wanna go higher, then we can cut our entry on break even point. Okay, so let's see. All right, as you can see here, what happened here? Our first entry taken out on a break even point and second entry hit the stop loss and they gave us reaction, but after this market hit the stop loss, which is very fair. You don't need to worry anything because you are following your structure, your strategy, your plan. Okay, suppose if market push downside and then how much you can make here. I'm showing you exactly how actually these things actually working. I'm not showing only profitable. I'm showing you that how actually things are working. Okay, if I wanna skip this, then I can skip. No, because this is a valid entry as per our plan. Okay, so I take it. Okay, but after this market hit the stop loss, showing reaction and then hit the stop loss, which is very fine. Okay, so where is our next criteria for the sell is here. Okay, after taking out this engineering liquidity. Okay, market already taken out this engineering liquidity, but there is no guarantee to mitigate this order block. As I told you in a previous entry type 2, that market may be taken out this high and close above it, and then you can apply same rule entry type 2. Okay, if market sweep this high, then you have to apply entry type 3. Okay, if market mitigate this order block, then you have to apply entry type 1. Okay, let's see what will be happen after this. In this case, this is our entry type 2 because market close above it. So entry type 2, what entry type 2 say? Entry type 2 say market must be taken out the first inducement before the sell. Correct. So this is entry type 2. So I will wait for the develop the price action, that how actually working. Okay, so you can see here market break this structure is here. Okay, after break this structure, where is our inducement, that how we can identify this is actual low or not, is here. Correct. This is our inducement when we can take a decision for the sell. After taking out this inducement, we can sell, and this is our entry type 2. Okay, so let's see what happened next. Market taken out this high, and after taking out this high, this become our entry type 3. When market taken out the high, recent high on a same point, then we can sell on the next candlestick break, which is here. Okay, so I will place my entry, even I can sell on market order on next candle. Okay, and target will be same, and 15 major low. Okay, so let's see what happened next. Okay, you can see here market enter here and stop loss just above it, and where we can move our stop loss and break even on little bit partial, which is recent low is here, M1 recent low is here. When market hit this recent low, we can take little bit partial and move our stop loss on a break even point. Okay, still there is no structure. Okay, so we can't move stop loss before this low. Okay, so let's see what happened. You can apply here same thing here. You can see if you know the structure, that how structure is actually work. This is a very interesting thing, guys. This is our low and recent high taken out. This become our main low, major structure. I'm talking about minor structure, but this is our structure confirmed. Okay, and then what happened? Structure taken out. Okay, and where was the recent structure? High or low? Break this low and push downside. This is not break any inducement, then market push downside. This high has been taken out by this move. Okay, and then this, after taking out this high, this low has been confirmed. Okay, and then market push again higher, and you have to wait for the confirmation. When we can sell? We can sell here because this is inducement, and we can sell on this zone. But I'm not saying this is good for you still. Okay, it's take a lot of experience. Okay, so what we can market create new high, lower high, and break the structure, close below it, and market taken out the recent low, and we can sell here, which is really good. Okay, because we are in a bearish market, correct, and we can sell here also and put the stop loss just above it, and target will be same. When market break this low, taken out this low, we can switch our stop loss and break even point. Okay, so let's see what happened next. Okay, we can move our stop loss and break even and take some partial on this entry and move our stop loss and break even. Okay, and let's see what happened next and wait for the result. What will be happen? Okay guys, so as you can see here, market hit our target as I mentioned here, M15 major low. So imagine here, if you catch any trades, these are 1 2 3 4 trades. Okay, and one hit the stop loss and one break even, and end of the time 1 or 2 or 3 trades hit our target. How much you can make money here? How much percentage you can gain here? This is our high probability entry module. Okay, this is very powerful and very unique. In this type of the entry, you don't need to focus on multiple things. You have to focus on main thing, that how and when we can take entry. Don't focus on many things like when market tap on the order block, then wait for the 1 minute confirmation to take entry, or this is a session low or high. As I mentioned already, that everything is a liquidity. Every session's high or low is liquidity. Everything, every candle's high or low is a liquidity. Major structure high or low is a liquidity. Everywhere is a liquidity. Okay, so you don't need to focus on multiple things. So finally, this is our entry model. How entry model actually work in 3 types of situation. Most of the traders, they teach you, I can say guaranteed you, they teach you only one thing: when market mitigate the zone, then you have to apply this criteria. Okay, they never teach you that how you can trade like this. But I would like to say only last one thing: don't move the ship. Trade fearless and logical, that how actually things actually work. Okay, and apply same criteria, same thing in your trading style. Doesn't matter your stop loss hit or not. If you apply these things, I can say guarantee you can see, you can improve your result, you can boost your trading skill. Okay, so thank you so much watching the entire video, and we are wishing you successful journey